Hey guys, welcome back to the Wall Street Bull. Anthony here. I hope you're all doing well and staying safe and positive out there. Yes, today is going to be a dividend stock portfolio update. The reason being I've hit a significant milestone of $60,000, which has taken me a very long time. And now I'm starting to see the power of compounding and growth in this portfolio. It's starting to snowball, which is what every dividend investor wants to see happen, all right? And I'm going to get into everything, so make sure you stick around to the end of the video. I'm going to show you, if you're interested, how to get started into dividend investing. If that's something of interest, of course, it's not financial advice, but stick around because you might learn something cool, all right? Massive shout out and thank you to every single one of you who have subscribed to the channel. I really appreciate it. Thank you very much. I love talking with everyone in the comments and the community tab. So if you are new to the channel, make sure you smash the subscribe button down there and turn on that little bell notification as well, because as you can see right here, I love documenting my journey with investing with cryptos, dividend stocks, growth stocks, talking about passive income, building financial freedom. And yes, my goal at the end of the day is to build generational wealth. So come along this incredible journey. We are just getting started. Also, if you can give this video a thumbs up, watch it straight through, it would really help me push this channel out to a lot more people, because the YouTube algorithm is absolute magic when you find. Ladies and gentlemen, do that. All right, so give it a good old thumbs up. Doesn't cost you anything. It's down there. Thank you very much. You guys rock. Also, little disclaimer, I am not a financial advisor. Please do your own research and due diligence with this stuff. I do not want to see anyone get financially hurt. That is why my #1 golden rule is I only invest what I can afford to lose. And yes, we don't like to lose, but you can lose money like that in the blink of an eye with any stupid investment, all right? So please be careful out there. Do your own research and due diligence. This video is for educational and entertainment purposes only. All right, ladies and gentlemen, the formalities are out of the way. Yes, today is a dividend stock portfolio update. I'm also going to show you basically how to get started into dividend investing, and I think it's very important. So, for those of you who do not know what the hell dividend investing is, it's simply this. You are basically buying a company, a good company like Coca-Cola, Kimberly-Clark, all the big brands that you see, Johnson & Johnson, 3M, all of these companies, these big corporations pay a dividend to their investors when you buy the share. All right, so I'm going to go through this. So many beginning investors do not understand what a dividend is as it relates to an investment, particularly for an individual stock or a mutual fund. A dividend is a payout of a portion of a company's profit to eligible stockholders. So when you buy a share, for example, in Coca-Cola, that makes you eligible to receive a portion of the company's profits. So you basically own a part of the company. It's unbelievable. Typically issued by a publicly traded company, of course. However, not all companies pay a dividend. Usually the board of directors determines if a dividend is desirable for the particular company based on various financial and economic factors. Sorry, there's a fire truck out there. I don't know why. Dividends are commonly paid in the form of cash distributions to their shareholders on a monthly, quarterly, or yearly basis. All right, so key points right here to take away if you're wanting to start in dividend investing. Dividends are a discretionary distribution of profits which a company's board of directors gives its current shareholders. So it's up to the company. They can decide not to pay dividends. All right, that's facts. A dividend is typically a cash payout, which is obviously to investors made at least once a year, but sometimes quarterly and sometimes monthly as well, which is what I'm invested in. Stocks and mutual funds that distribute dividends are likely to sound financial ground, but not always. Investors should be aware of extremely high yields, which is facts, since there is an inverse relationship between stock price and dividend yield, and the distribution might not be suitable. Stocks that pay dividends typically provide stability to a portfolio, but do not usually outperform the high-quality growth stocks, and that is facts also. So basically this, you can invest in dividend-paying stocks that pay you cash flow. The dividend yield, you've got to keep an eye on as well. You can also invest in growth stocks, aka Tesla, which does not pay dividends. It is a growth stock. It's only going to go up in value. All right, that's a growth stock, so we'll get into that as well. I'm going to show you my portfolio now. Here is my brokerage. So if you're looking to get started into, stocks here in Australia, especially in the US stock market, which I'm incredibly bullish on, there is a referral link below for stake. You will get a stock in Dropbox, GoPro, or Nike. Please feel free to use that if you wish. Of course, do your own research. Again, in the United States, for dividend stocks, you can use Webull. I can't get affiliate links for those, so please look them up. And Robinhood are, basically the go-tos. They allow you to buy fractional shares in companies as well. So like $10, $20 you can put into like Apple, for example, which is currently priced at $172. You can buy a fraction of that to get started. It's very straightforward. If you go to a traditional bank or a broker, they're going to have minimum fees, which is really annoying. That's why I love Stake and also Robinhood, Webull. They allow you to buy fractions, so a small amount of money. Anyway, let's get into it. My portfolio is currently sitting at $43,223.18 as of obviously Friday, which was the 12th of August. And again, I had a total return on the day, which means Monday to Friday. So Friday, the market closed for the week. Again, it only trades Monday to Friday. On Friday, it closed at profit of $556 US, which is really nice. Total return across my entire portfolio, I've made 25.37%. Which is just insane. So $8,746.13. Now, that is a pretty incredible return. Why? Because I bought all throughout the pandemic when everyone was so fearful and getting out of the market. It was just chaos. The market completely crashed. Meanwhile, I continued to dollar cost average, which means every single week I've set an amount of money, could be 10 to 20% of whatever I earn that week goes into my portfolio. And again, basically, I've just been continuing doing that for a very long time. And whenever I get lump sums, of cash, I put it into here because I want to keep that money forever. And this is how you grow money pretty much, all right? Now, dividend paying stocks, obviously you can see right here, my biggest dividend paying stock, of course, is Exxon Mobil. I'm going to show you this right now. XOM, ticker symbol right here. And obviously everyone has a ticker symbol. Exxon Mobil is currently sitting at a share price of $94. On the day, it's up 0.87%. But if I go to some crazy stuff, on the week, it's up 5.43%. On the month, it is up 12.5%. And on the year, it is up 65%. Now, that is just extraordinary growth right here. Basically, you would not get that anywhere else. So it's pretty incredible to see that. The dividend yield I was mentioning before is right there. You can see it's got a 3.78% dividend yield. At the time during 2020 when the market absolutely crashed, and I'll show you right here, you can see it. Where it is right here, guys. Let me just put my finger here so you can see it. I don't know, sometimes this thing has a mind of its own. There you go. All right, so the market completely crashed, obviously in 2020, and my phone's not working right now, but anyway, basically you can see right here, guys, that's when the situation happened around the world, and the price dropped dramatically right there to $40. And that's when I continued to buy and dollar cost average in every single week. And this stupid thing doesn't want to work. But anyway, so basically continue to buy, and the share price is going up as well. However, their dividend yield was also extremely high and was really risky because everyone sort of feared that they would cut their dividend. Now, that can happen with dividend stocks as well. If the yield is extremely high in companies like Exxon Mobil or AT&T or Disney, which has cut their dividend, basically, they can cut that dividend from being paid to their investors. And the reason being is they need to retain their capital, their profits, to reinvest back into the company to survive. And then companies like Ford did cut their dividend as well during the pandemic and reinvested those dividends. However, they just started paying those dividends as well. So let's go to some other big holdings of mine. So that is an individual stock scenario, right? So you can buy individual stocks. You can also buy index funds right here. Now, for example, VYM right here is a Vanguard ETF, all right, an exchange traded fund. The current share price is at $109. So basically what this is right here about it, I'm going to show you this right now. Vanguard High Dividend Yield ETF Index Fund right here is an open end investment company. The fund seeks to track the performance of an index that measures the investment return of common stocks and companies that are categorized by the high dividend yield. So again, basically what this does is it's an S&P 500, so the top 500 companies in the United States. When you buy this one share, you are effectively buying the highest dividend paying yields in the S&P 500. This is what index funds are and ETFs are. All right, so VYM is basically something that if you don't want to buy individual stocks, you can buy an index fund. All right, put your money into this. Now, this has a dividend yield of 2.96%, which is incredibly low. However, this has the ability to grow over time. Now, again, this is what I'm talking about in terms of high risk, dividend yields as opposed to high growth and growth stocks in general. This is a mixture of both, as well as Exxon Mobil, because it's a long-term hold for me. So VYM, long-term hold. This is going to have growth over time. You can see in the last month, it's up 7% on the month. On the last year, it's up 1.20%. However, in the 3-year chart, you can see it's up 28%. has a dividend yield of 2.96%, which again, my perfect ideal range is between 3 to 5. Anything above that is really risky, all right? Now, that's pretty much it for an index fund. My other biggest holding, of course, is SPHD. And by the way, Exxon Mobil pays quarterly, which is 4 times a year. VYM pays quarterly, which is 4 times a year. And let's go to a monthly dividend payer now, because I think that's important. SPHD is an ETF, a low volatility ETF, sorry, the S&P 500 ETF. So again, you're buying this. What SPHD does is basically select the top 50 companies in the S&P 500 that have high dividend yields. And basically this is another growth option as well as receiving monthly dividends. So you get paid every month. SPHD, $46 price right here. Dividend yield of 3.30%. You can see I've got about 121 shares of SPHD valued at $5,665 USD, and I've had a total return of 15%, which is just insane. If I go to the last week, let's have a look. It's up 1.30%. On the month, it is up 5.44%, which again is really nice as well. 4.76% on the year, and let's go to the 3 years right here, 15%. Okay, so that again, that has gone up 15% in value. So my money's growing as well as compounding, receiving dividends, getting paid out every single month. This is pure cash flow right here. This is what big boys do. And the rich, straight up, this is what they do. Facts, they have massive portfolios. I've got 120 shares. They probably have 1 million shares, and they would receive cash flow every single month. Now, some other things I've been investing in are covered call ETFs as well. And I do have a sizable, now I'm just growing my position in these covered call ETFs. Now, I just want to show you right here. QYLD right here is an extremely high dividend yield. It has a dividend yield of 11.63%. Now, it's a very interesting concept right here for what is a covered call. I'm going to show you this right here. Covered calls are an excellent form of insurance against potential trouble in the markets. When an investor with a long position in particular asset sells a call option for that asset, generating a profit in the process, it is considered a covered call. A key to a covered call approach is that the call option buyer is obligated to pay a premium to buy it. That means the smaller losses when the asset obviously declines in value, but the seller can still benefit if it goes up in price, provided the calls were out of the money right here. Covered call strategies were one of the exclusive providence and sophisticated options traders. However, covered call selling became available to everyone in the exchange traded funds, ETFs, like I'm going to show you now, during early 21st century, which is really nice as well. So, it does have a high potential for, returns and dividends, but again, it is high risk. Now, the thing about QYLD that I personally love is the fact that it pays monthly dividends as well, and it's got an extremely high dividend yield of 11.63%. However, with this particular ETF right here, given the fact that it does, mainly focus on dividends being paid out every month, it does not have the ability for massive growth right here. You can see on the year, it's down actually 18.57%. And in the last 3 years, again, let me just refresh this right here, basically the same, 18%. All right, so it has been on a decline in the last 3 years. However, it does make up somewhat that downside in regards to the dividends being paid out. So you've got such high dividends, it's just compounding for me. So this position in my portfolio basically allows me to compound my income a lot faster, and basically generate me more cash flow. Now, the other one I'm going to show you as well that I did buy the other day was JEPI, which is a JP Morgan covered call ETF right here. Now, this one is very interesting right here. So the share price is sitting at $57.62 right here. It has a dividend yield slightly lower at 9.46% as well. However, this one's really interesting as well because this one actually does best of both worlds. It has the covered call ETF strategy, which again provides a higher yield for investors. However, this also does provide price appreciation in the stock price. So the stock price is going up as well. So if I go into last week, it's up 1.86%. On the last month, it's up 3.56%. In the last year, it is down 7.33%. However, on the last 3 years, it has gone up 15% in price. So again, this is very different to QYLD, which has a price decline. However, it makes up for high dividends being paid out every month. JEPI right here basically has the price appreciation in the stock price as well as receiving monthly dividends as well. So again, I'm only invested in these covered call ETFs for that monthly income to help me grow my portfolio a lot faster. And the reason why I say that is because later on in age, your age basically comes into play. The longer you're in the market, the more money you're going to make. The shorter time you've got, you need to start thinking about where you're placing your money to generate that income more fast, all right, more quickly. That's the facts right there. So again, that's pretty much it for that. Now, in relation to growth stocks, for example, I just want to talk about this. If you go to Tesla, my Tesla shares, for example, this is a pure example of a growth stock which basically does not pay dividends. Tesla, right here, has a share price of $900. All right, it does not pay a dividend. You can see right there, it's triple zeros right there. So again, they don't pay dividends. So Tesla is a growth stock. All right, I've had a total return on my money of 92.94%, which is just mental. All right, that's just insane. Current price, my shareholdings have got 4 shares of Tesla now, $3,655 USD. And again, if I go to the week, it's up 0.13% on the month, 30.63% on the month, which is just insane. This is like crypto stuff. On the year, it's up 25%. If I go to the last 3 years, it's up 1,946%. Now, this is a pure example of a growth stock, all right? So people don't buy this for dividend income. They buy it for the growth. So this is why I'm very diversified with my investments as well. All right, so you need diversification. You need the growth. You need the income. And again, that's pretty much it. So you've got to think about your positions and where you're putting your money because you do need the growth over time to beat inflation. This is beating inflation right now. 1,900% return is just mental. All right, so anyway, that's pretty much it with that. Let's get into my dividend tracking app now because I want to show you everything on here. You can see that my portfolio is currently sitting at, let me fix this screen right here. Whoop, there you go. $2,578.99 per year in income. Completely passive. I do not have to think about it. It's very, different to buying real estate. I don't have to fix air conditioners, heaters. I don't have to worry about owners, corporations, fees, land tax, any of that business. The only thing I have to worry about is reinvesting the dividends, all right? And you can see I'm making $214 a month. I'm making $7 a day, which will buy me a cafe latte. Although I'm an espresso drinker, so it's about $3.50 if you go somewhere that's reasonably priced. Anyway, 5.21% dividend yield is basically my average. Now, this is interesting. In the next 2 days, I'm going to be paid out everything right here. So you can see all my dividends being paid out. My biggest one there is Realty, which is a real estate investment trust that is going to be paying me $12.49 in 2 days. And again, I receive that every single month. If you go down to my top dividend payers right here, Exxon Mobil pays me $521 a year. That pays out quarterly. SPHD pays out $280 a year. That pays out every single month. Well, not $280, but split up between 12 months. QYLD pays me $259. Excuse me. EPDs and Enterprise Product Partners basically is a midstream company that supplies gas and oil and so forth. $223 a year. RYLD pays me $200 every single year. That pays out monthly as well as QYLD. Realty is another monthly dividend payer, $149. XYLD is a monthly dividend payer as well. The covered call ETFs pays $147 a year. AT&T $136 a year. Prospect Capital $105. That is a monthly. AT&T is a quarterly. VYM is a quarterly as well. Pays me $89. Stag $61. Look at all the money that I get paid from investing in these companies. Okay, and I mean, it can go, I've got a lot of, holdings in here basically, but you can see right here, even down to the cents. That's crazy. All right, so this allows me to compound my money very quick, and I'm getting paid while I sleep. Who doesn't want that? Now, I've got a goal now which has gone up to 3% to $100,000 a year in completely passive income. In order for me to do that, I would need to invest $1.8 million into this portfolio. And again, I believe cryptos will get me there a lot sooner, and that's the reason why I'm doing my stock portfolios, because once my cryptos absolutely go parabolic, when you cash that out, you need to keep that money. It's harder to keep money than it is to make it, all right? So this is how I'm going to keep my money, producing more money. It just doesn't stop. Now, 40% comes from dividends from miscellaneous companies right here, basically energies and minerals companies where my money's coming from. Receiving this month 175 Australian dollars. And I'm going to show you something crazy right here. You can see it right there, $60,568.25 in my portfolio. Total returns is $11,000, which is 22%. Okay, this is in Australian dollars now. If I scroll down to something that's really, really bullish right now, this is why I love dividend investing, the power of compounding. Warren Buffett talks about it all the time. In 10 years, if I do not reinvest any more of my money, the portfolio is going to be worth $115,000. Basically, by me reinvesting the dividends that I get paid out from these companies, it will generate me $9,592 every single year, which is just nice. Now, the beautiful thing about compounding is the longer you're in it, the more you'll make. In 20 years, this portfolio, if I didn't put any more money into this, is going to be worth $450,000, and it's going to generate me $64,776.74 a year. All right, that's over $1,100 a week. All right, that is getting up to some serious money, and this is just the beginning. I want this to be up to $100,000 every single year. All right, that's my goal. That's what I want. All right, so I want that to be over 100 grand probably. All right, so again, I'm going to achieve that from cryptos. So it's going to get me there a lot quicker. Anyway, you can see here my average monthly income is at $212. Sitting on the months right here. I've got some low months, but that's okay. I'm building them up. My highest dividend paying month is going to be December. I'm due to receive $300, which is nice. You can see right here, November is 160. I've got October here, 133. September next month basically is going to be another massive month for me. June as well is $330, and this is just going to keep growing and growing and growing and growing. It takes time. But that's pretty much it, guys. I hope I've given you a pretty good explanation of what dividend investing is. I know it's a long video, but hopefully you guys can pick something up that you may or may not have known. Again, everything is linked below with the referral links for Stake. That is my broker. And if you're in the United States, again, you can use Webull, you can use Robinhood. Just find a good broker that allows you to invest into fractional shares, because I know that the banks and institutions take a massive cut of that initial investment, around about 20% per trade. So it's pretty crazy. But that's pretty much it. All right. Thank you very much. We'll speak to you all in the comments. If you have any questions, leave them below. Hopefully I can answer them for you. But happy investing and be safe and do your own research. Of course, not financial advice. Peace out. Bye.